ऊपर पे जो रेड बटन है राइट, you press that. You're not on Google Meet anymore, so I can't see it. Yeah, you're live on YouTube. I'll just confirm LinkedIn and Twitter. Yeah, you're live on LinkedIn as well. Okay, cool. See you. Hey Mohit, he's all set. You guys are live on YouTube and LinkedIn and Twitter.
Thanks,
Yeah.
everyone.
So I have left the Restream account, so
Hi, good morning. What a wonderful Saturday to be today. The weather out here in Bangalore is very pleasant, and I'm sure wherever you're joining in from, it is a beautiful Saturday. Thank you for waking up so early. I know it's a Saturday, you would have had your Friday plans. We'll wait for about 60 minutes, 60 seconds, sorry, and then we'll get going. Till then, if you have any questions, please keep posting because it'll be wonderful for us to answer those as we go along. And also, we have a special Q&A session. So please keep asking your questions, and it'll be great to see or hear all of you, right? So if you're there, I can see a few people logging in already. If you're there, just say hi, and hope you're all doing good and safe.
Good morning, Anand. Good morning, everyone.
Hi, Mohit. Yeah, let's start. So, good morning again, and hope you're all doing good, as I mentioned. So, today's session is all about an important and a very important project or, or, or an assessment that we all wanted to do, an exercise that we all wanted to do for young millennials like you. So, without further ado, let me get going quickly. What? Yeah. So this is a brief about my firm, Augment Capital. We started off in the year 2010. Just to give you an understanding, I have been an ex-banker. I was with ICICI Bank and ABN AMRO Bank for about 7 years in the wealth management space before starting Augment Capital Services. I'm the founder of the firm in 2010. I have over 19 years of wealth management experiences where I've handled senior clients from a lot of tech firms. Those include VPs, senior VPs, directors, and managing directors of the firms. Augment Capital was formed in 2010 with the sole objective that we would grow along with the client and not at the cost of client, which was the industry practice then and even today. When we started off, we used to have manage about $1 million kind of an asset in 2010. Thanks to the support of clients and the kind of faith that they had in us, today we manage over $70 million and counting. So 11 years in operations, and we have grown 70 times. Mohit, as you can see, is a CFA level 2 candidate, but is a qualified chartered accountant. He joined the firm with a lot of experience in M&A, consulting, and auditing. He is an ex EY, which is Ernst& Young, and Deloitte.
So thank you, Anand, for the quick introduction. I'll now just set the agenda for the webinar. So firstly, we are just going to introduce as to what Wealth School is about, followed by how the idea of Wealth School came to us. Secondly, we have Sharan on the webinar today, with whom we'll have a live Excel demo and see as to how key financial inputs can bring varied level of transformation in your wealth journey, and basically how will that change our view towards wealth and its key drivers. Finally, we're going to speak about as to how are we going to execute the Wealth School program. What will the Wealth School program include in terms of live sessions, personal discussion, creating a cohort community, and it will be followed by a Q&A session. So I'll now move on to the first segment, which is about Wealth School. Now, firstly, it's a financial literacy program, which you must have seen from our LinkedIn post, our Instagram channel. But to make it more specific, it's an exclusive financial literacy program, and it's not a open course structure. So we'll be inducting people who are joining this program and have a close cohort kind of a scenario where we'll be teaching finance and finance related topics. So toward the end of this webinar, we'll be sharing a Google form. Whoever wants to join the program can click on the link, fill the details, and join the program. So, what's about Wealth School? So, it's about kickstarting or re-pushing your wealth journey and helping you build your wealth plan. So, it's about for whoever who haven't started investing big time or have already started. It's for both of them. It's for a millennials mentorship program where me and Anand, along with a lot of other guest speakers, will be here on the sessions to give you financial knowledge and awareness. So it's about discussing finance and investment related topics and helping you take the key investing decisions, assist in timing your financial goals and knowing what kind of a saving and expense trajectory you need to have. And most of all, it's about action, being action oriented, helping you inculcate the importance of disciplined investing, allocation methods, portfolio reviews, so that you can reach the goals and your wealth journey can be, we can reach to that specific wealth journey what we want to have. So, and everything of this session will be through interactive methods, and it will not be through pre-recorded modules. It will be a direct access to how we're going to plan it up. So just in case if you're thinking that why did Augment Capital came up with this program, I would just want Anand to throw some light as to what actually made him think about Wealth School.
Thanks, Mohit. Everything starts with a story, in my opinion. So this is a story which is entrenched in my mind very clearly. About a couple of years ago, after the pandemic, one of my clients and I had gone to the airport to drop off his son, who was going to the US for his, master's in science. This was a very emotional moment, I'm sure, for him, and I was also kind of, emotional about it because there was a lot of stake. We struggled. In fact, we struggled through to get this fund to fund the son's education. While coming back after dropping him, after saying a goodbye to the son, we while coming back and driving, I was driving, and the client said, "Hey, Anand, I really thank you so much. I want to give you an important, or I want to, ask you an important favor, which is very important to me." I said, "Please go ahead and tell me, sir." He's a senior VP of a very large American firm. He said, "Just like the way you have hand-holded me through my investment journey in the last 15 years, I would like you to do the same for my son, who's just 23 years old." That's when I realized there is something that is amiss in the kind of knowledge that we gain over the years in our schooling and also in our colleges. While everyone wants to, do well in life, earn a lot of money, there are things that they don't learn, which is the most important thing is money management, or what do you do with the kind of money that you end up saving, right? That's when I thought there should be something or a platform that I should launch, which will help all these young millennials also to craft their millennial lifestyle and the wealth journey, so that over a period of time, all the important goals, like right from their marriage to buying a car to a home or kids and education and their own retirement, is very, very smoothly taken care of. And that is when Well School was formed. And thanks to Mohit, this entire thought process that I had, he put a lot of structure to it. Being a 40-year-old guy, I'm not as good as used to be on Excel. Today, there are a lot of things that have changed in Excel and a lot of things have changed in the algorithms. He made a brilliant tool that will help you to project your wealth journey and also achieve all your financial goals over a period of time smoothly. So this is when Well School was formed. The clear objective is to handhold. The important word here is handhold millennials' wealth journey. With
Uh,
that, with that thought, I want to introduce you to one of the most amazing person that I have met. His name is Sharan. I'm sure everybody knows. He's got 830K plus followers on Instagram. And the kind of knowledge that he brings in via sharing important information in his own creative ways is absolutely amazing. I know he knows needs no introduction, but yes, I thought I would at least be thankful that he's joining this webinar to explain how to craft your well journey. I mean, you're going to project his own life and try to see how he would end up having his own retirement corpus at the end of few years. Over to you, Mohit and Sharan.
Firstly, thanks for having me here, Anand. Very thrilled to be part of this workshop where we where we teach a very critical life skill which most people have not taught in school, which is learning how to manage your money or learning what to do with the money that hits your bank account every month, right? Apart from spending it. Very thrilled to be walk through this workshop, and I hopefully many people learn how to do it and take something really valuable from this entire session. So, and for those of you who don't know me, I work as an AVP at a hedge fund called Hedanova, and I also create personal finance content on Instagram, and I also write on personal finance tips and tricks on my LinkedIn posts, and a little bit on Twitter as well. So yeah, that's a brief introduction about me. Yeah, let's get it started, guys. I think everybody's waiting for us to get it started.
So thanks, Sharan, for that quick introduction of yours. So now, as we had mentioned in the agenda, we'll do a live demo of a Excel model along with Sharan. So I'm just projecting my screen for the Excel model. Now,
Sure.
I hope you guys can see it. Yeah. So here the agenda is that I'll be taking a few inputs from Sharan in terms of what his demographic profile is, what is his current salary, what is the expectation of his increase in salary, his investment philosophy, and also the financial goals which he would have had in mind, so that we can project how his wealth will grow from the age he starts till the end till the time he retires and post retirement. So over to you, Sharan. Would be helpful that you can share me a few inputs.
Sure. So my name is, of course, Sharan Hegde. I'm 25 years old.
Okay.
And,
What would be your retirement age estimate?
I would like it to be tomorrow, but to be realistic, I would say 55.
Got it. What would be your current salary?
My current salary, we can take it as 1 lakh per month. So
That's
that's about
basically
12 lakhs per year in your input.
got it. What would be your assessment of your increment year on year until the age of 45 and post 45? Because there could be a few changes here and there in your
Right.
increment.
Right. So usually when you are in the same company, the increments are probably sub 10%. But when you make, let's say you shift companies every 4 to 5 years, and there's a significant increase, maybe that's 20%. So to be on, to average it out, I would say something like 12 percentage per year until the age I'm 45. And then
Okay.
post 45, maybe I do not want to make any shifts and I just want to be in the same company
Got it.
till I retire. So probably I'll be at 8 percentage per year, which is like the standard post 45.
Got it. And with respect to bonus?
Bonus, I think my bonus percentage, we can take it as, most companies, my company also gives like, 1 month salary as bonus. So that's like 8 percentage. And I think post 45, we can take it as 5 percentage because then, at post 45, the salaries are usually high. So the bonus also doesn't become a huge percentage there.
Got it. Now, the next point which I want to understand from you is what would be your investment philosophy? What is your risk appetite? So, here I've put a table in terms of how your risk profile can be.
Hmm.
So, ultra aggressive meaning you have a current portfolio of 100% equity and zero in debt.
Hmm.
Aggressive being 80% in equity and 20% debt, and likewise for conservative and moderate. So, what would be your investment philosophy until the age of 45 and something like post 45?
I would say I would be ultra aggressive until the age of 45, and moderate post 45.
Okay. Okay. And so I understand you are at the age of 25. Do you have any existing investment amount which you have deployed somewhere?
Yeah, I have around 2 lakhs in liquid capital.
Okay. Okay. And what would be your rough estimate of your monthly expenses, excluding the annual expenses which you do?
Okay. This is including rent and all of that, right?
Yeah.
Food, everything, housekeeping, everything. So I would
Yes.
say I stay in Bangalore, and I stay with my friends. I just take like one room in that shared apartment. It's about 30,000 rupees per month would be my monthly expenses.
Okay. And what about your annual expenses? Like having trips and all once or twice in a year?
Yeah, I mean, I think we can take like 1 lakh extra on any miscellaneous annual expenses, maybe vacation, going to Goa or something like that. I think we can consider 1 lakh in total for all those stuff.
Got it. I'll move on to the financial goals which you would have had in mind in terms of there would be like getting married, having a house, having cars, having means kids for an education,
Right.
any kind of education, and their marriages. So,
Mm.
have you planned anything of it?
Yeah, of course. When everybody does end up getting married, so even though I don't want to very early, but I think eventually the pressure will come on. So maybe we can consider marriage as one goal. And I'm 25 now, hopefully not before 30. So we can take 30 years for,
Okay.
at the age of 30, I'll get married.
What would be your estimate of how much expense from your end you will be doing, not considering your parents'
Mm.
outflow?
Um, so I don't want it to be a very big thing, just my close friends. So maybe I think from my end, I wouldn't want to spend more than 10 lakhs on my wedding.
Okay, I'll take 10 lakhs then.
Yeah.
Okay. Post marriage, anything else with respect to financial goals?
Yeah, I think getting a house is sort of viewed as an important milestone in everybody's lives. So maybe maybe after post 5 years after marriage, maybe at the age of 35, I would probably get a house,
Got
and
it.
maybe you can take 1 crore for that house.
That would be for an EMI, right?
Yeah, that's right.
1 crore in Bangalore seems also suitable.
Right.
Post the first house we have at 35, what would be your next financial goal?
I think maybe another house somewhere down the line. Maybe if I get too rich, maybe I can buy another house, and I don't know. I'm just guessing here. I think probably I would have another house as well at the age of 55, and maybe let's say that house, the value of that house is around 2 crores today's value. Maybe this would be a better house, right? Like a bigger house, right? Maybe I move to a better house. Maybe I have kids. They're all grown up, so they want bigger houses.
And when you say you want to take a second house, would you be selling your first house and taking the second house?
Yeah, I wouldn't want to have two houses at the same time. I think I would sell the first house and have the second house.
Got it. So basically, you're saying you will have the first house. Got it. Post that, what would be your financial goal next?
I think child's higher education
Okay.
costs are increasing significantly. I think at the age of 55, my son or daughter would be something like 18 years old, 18, 20 years old, and educational expenses are really high right now. So I would say maybe I would want to have around 40 lakhs saved for each of my kid. Actually, I think if I have two kids, which is kind of the normal in India, average in India, I don't know how many kids I have, but let's for the assumption's sake, let's say two kids. I think for each of them, I would like to have saved 40 lakhs. Maybe one at the age of 55 and maybe other at the age of 60.
And those both would be at EMI, right?
Yeah, both would be at EMI.
You want to keep it at 40 lakhs. Anything more in part of your financial goals?
Uh, I think not sure if I should do this, but if I'm really rich down the line, then maybe sponsor my kids' education as well. I mean, even for my wedding, I don't have the money to sponsor my wedding or whatever. So I think it would be fair
The
for me also
child
to do
marriage.
it for my kids. So at the age of 60 and 65 for both my kids, I would like to have saved at least like 25 lakhs in today's value for both of them.
And do you think that would be on EMI or it would be like a straight?
No, it has to be straightforward. It has to be one shot. It cannot
Got it.
be EMI. Yeah.
How much did you mention? 20?
25 lakhs each.
Got it. Okay. I guess apart from that, anything else from a EMI thing? I guess you missed on having cars because with growing lifestyle, you'll
Mm.
probably shift to one car to another.
Right, probably. So I think the age of I'm 25 now. I think maybe at the age of 28, 3 years from now, I could get a car. Like I really like Honda City, so let's take 10 lakhs on an EMI basis, and then maybe my second car at the age of 40, let's say that is at around 20 lakhs, and then my third car at the age of 50, and then let's say that is like a really expensive car, and the last car I buy maybe at 30 lakhs
at
All
the
on
age of 50,
at the age of 50, yes, and all on EMI bills.
and you want to have it at 30.
That's right, at 30 lakhs.
Got it.
Today's
So,
value, man. Uh, People should not confuse that this is the value at the age of 50. Of course, it will be
yeah.
much.
So, yeah, just to clarify that this is the amount in present value terms which we are taking because the inflation will kick in between.
That's right. That's right.
Got it. So, based on your profile, which you have mentioned, Sharan, so I've just made a quick dashboard in terms of what your demographic profile is currently, which you mentioned you are at 25, you want to retire at 55, having
Mm,
current earning of 12 lakhs. And with respect to your investment philosophy, you have a ultra aggressive philosophy until the age of 45, and post that you want to get into a moderate kind of a figure.
right.
Current expenses on an average annual basis comes to around 38,000.
Mm,
And with respect to in terms of the model, we have created boosters wherein post marriage, post having kids, there'll be extra expenses coming in. So
right.
that is what we have already built in. And on a year basis, what is your likelihood of increasing your expenses? And
Right.
the financial goal which you mentioned is something around 5 crores you want to spend. Just moving down, this is your financial goal which you have entirely mentioned. We have just mapped it out in terms of what year and what kind of expenses you are going to do in today's value.
Okay.
It means excluding the inflation. Now the next thing which I want to show you is that with respect to your savings and expense trajectory, how it is going to be from the age of 25 until your age of retirement. So
Mm,
this is the mix of your savings and expenses which are going to be there, because if you stick to this savings and expense trajectory and investing that savings specifically, this is somewhere your wealth trajectory will look like. Now, having started at 12 lakhs and saving to an extent of something around 59%,
mm,
you tend to have a 10 lakh of investment corpus as of now. And as you see, by the time you reach age of 55, when you're going to retire, you have a wealth of 34 crore, 34.6 crores. And
mm.
post that, based on your investment philosophy, you reach to a 100 crore investment corpus. Now, that is how, based on the inputs which you have currently, that is how the wealth trajectory looks like. And obviously, as you had mentioned earlier, that there will be a lot of shifts happening in your earnings, your expenses. It is
Mm.
when your wealth trajectory will keep on being dynamic in nature. But based on current dynamics, this is somewhere you are reaching today. And if we stick to this, the amount will reach to 100 crores. Now, I would just want to just shift and show people that in case your investment philosophy changes, let's say if you are not too much bullish on equity and not having a 100% equity investment, let's say if you have a 80% equity and 20% debt, how does your investment profile look like? Also, post 45, if you are taking a conservative approach, how will your wealth trajectory turn into? Now, if you see, the map has changed. Like at the age of 70, when you are going to leave a legacy behind, you have a corpus from 100 crores to 22 crores. So that is how your wealth will deplete, or it will change, or it will be so dynamic based on few key parameters. Like in this case, it was investment philosophy changing and shifting from equity kind of a return, equity kind of a portfolio, shifting toward debt. That is how your wealth will look like. Now, I'll just want Anand to speak about as to what are the key questions which comes out from these kind of analysis.
Well, this was very exhaustive. This is wonderful. Sharon, thank you so much being very transparent and open about it. I really liked it. And I thought this was very comprehensive and very measured. Sharon, you come across as a very measured person. So, thanks for that.
Thank
So, what are the key questions that come after this? Is let's say, as you could see, post the discussion. This is what we will be doing, right, with you. So, post the discussion, you can see how the trajectory, wealth trajectory, looked like. What kind of financial goals you have for pre, post retirement? What kind of investments? I mean, have you invested less than 50%, more than 50%? The questions is, what are your monthly spends? Are they more? Savings are less? You need to look at all those. Have you taken medical insurance covers? And few other important questions, as you can see. I'm just changing the layout so that everyone can see the question. So have you taken medical insurances? Have you taken, are you able to manage your investments and generate required alpha? So you need, these are the kind of important questions that come after this in your mind, right? And we will try to address these when we have a one-on-one session with you.
Right. It is so interesting to see that even though I had all those expenses which any typical person would go through in his entire lifetime, marriage, kids education, kids marriage, my first car, second car, first home, second home. Even then, I was able to end up with 100 CR at the time of my retirement. Now, for most people, this 100 CR might seem like a big number in today's term, but the important thing to note here is that it's at the age of 55. I'm 25 now. That's 30 years from now. And the value of 100 CR 30 years from now, if you run the numbers, probably it's just what 30, 40 crores, right? And which is what, with 30, 40 crores enough to live a comfortable lifestyle. I mean, more than comfortable lifestyle today. But most people might say, 100 crores, how is that even possible? But please remember that might not be a very big, that might not be of very much value 30 years from now.
Correct. So we have done something called a PV, which PV is present value. So for example, 1 crore, which was worth of 1 crore in 2004. When I actually started, right, I thought I would retire the day I have 1 crore, to be honest, right?
Exactly right.
I have more than that, but this is like 2004 when I started off my career, and today that 1 crore is not enough, because the PV, present value of 1 crore, is not as much as it used to be in 2004, because
Right.
everyone needs to realize that your biggest enemy is inflation.
Right.
Right, Mohit? Next.
And not just that, so inflation, people think like, it's 5 to 6%, but when you have a very luxurious lifestyle, your inflation is much higher than what the nation's inflation is, right? Inflation for regular stuff like, food and, the common necessities, those will be kept low by the government. But for luxurious items, things that for going out, eating out at restaurants, sin products and all of that, those have very high inflation, including education, unfortunately.
Yeah.
So that is an important thing to note.
So what does this well school include? I mean, as people have seen, first point which I want to very clearly highlight is the same discussion that Mohit had with Sharan. If you enroll for this program, which is free, Mohit will have the same kind of a detailed discussion with Sharan, show you the wealth trajectory, and this is one-on-one, okay? And also help you plan your savings, your expenses. We do have an extensive expense management tool. We are trying to use analytics there. Plus, once you save and save a lot more than you used to earlier, we will show you how you should rightly invest, so that over a period of time, you achieve all your financial goals. So this is not just about teaching you, this is also about hand holding you. I keep insisting on the word hand holding, because that is a key thing which we all millennials, I'm at the end of the millennial, you guys are at the beginning of the millennial, so will be missing, right? So that's the reason why we want to handhold you throughout the journey. But to start off with, we will have one-on-one personal discussion, that is first, plus every second Saturday, once we start this program, and after we do your one-on-one discussion, we are going to create the right mindset for creating huge amount of wealth. Guys, it is not just important to create savings, invest, but also create the right money mindset, which is lacking today, because everyone knows that, okay, I invest in an X stock, it goes up 2X, it's a great return. But how do you consistently grow so that over a period of time, you have significant amount of wealth? That needs a lot of mind tuning. And that is what these 12 sessions that we are planning to do in the next 12 months will concentrate on. The 12 sessions, the topics that we have thought are many, but I thought I'll just highlight those important topic which can be on the broader ones, being philosophy of investing. As I said, behavioral finance, investment mindset, getting in how to save or spend less, how to save more, what kind of rules you need to have on the expense side, what is the philosophy of great investors. That gives us some input, some key inputs on what did those guys do to create immense amount of wealth. Like yesterday I was talking about Rakesh Jhunjhunwala, right? So compounding, how do you compound your portfolio returns? Then we also concentrate on the investment bit. So what are the kind of avenues that you have? There are varied avenues. Instead of making it clear, so today there are 4,500 mutual fund schemes. Just imagine the plight of a young investor having to go through all that. So we try to streamline those, give you a few investment avenues, what kind of return expectation that you can have. How do you build the portfolio, right? What should be the fundamentals of it? How do you concentrate on sectors, market caps? And let's say, should you do systematic investment? Should you do lump sum investment? and plus other 2 3 important topics, like how do you plan your parents retirement, which I think will become more prominent once you start going towards 40 or so. Like I'm planning for my dad's retirement. Inflation, like Sharon was mentioning, right? The present value of the money keeps depleting primarily because of inflation and insurances. These are the kind of, if you see, the topics are broad based. It's going to cover a lot of important things. This is just a session so that you understand the basics. Plus, post that, we'll keep on, helping you in managing your assets, finances in the right way also. Plus, what I've done in the past is that I've spoken to a lot of industry leaders. If you see Mr. Nilesh Shah, who's a managing director of Kotak, I've spoken to one very very super personality like Ms. Radhika Gupta, Mr. Tahir Badshaw of Invesco, Andrew Holland. These are the kind of personalities that we bring in or I talk to, so that they give their perspectives, because these are legendary investors in Indian landscape. May not be as popular, but they are someone whom I personally look up to, and a lot of people look up to. So I would try to bring in personalities like them to help you in those 12 sessions also, right? And finally, in this part, I'm what we are trying to do is, let's say today Russia is attacking Ukraine, and tomorrow there'll be a Fed tapering. Day after tomorrow there's a UP election and all that stuff, right? How do you cover what kind of things that you need to look for is what we will cover in the monthly newsletter. So, for example, if Feb was focused on budget, Jan was focused on XYZ, December was focused on something else. So, we'll try and focus and give you important updates on what can affect your portfolios and how do you plan for those kind of events or so.
Yeah. Also, with the program, we want to create a networking platform on Discord, which will be for the exclusive community, where we can talk on various financial topics, post our doubts, and have a thread-based discussion. So the purpose of this platform is having a constant flow of knowledge transfer within the community, and thereby having a knowledge repository. Also, along with the Discord platform, we want to create a WhatsApp group for the community so that we can update on financial markets and financial news. So keeping the community together with respect to whatever is happening in the financial markets in the updates, so that we can be constantly glued with it. Along with that, we will be having a having heard about a lot of talks on finance, having heard a lot of guest speakers, we finally want to make it action oriented. It's important that we start taking steps towards the drivers of wealth creation, be it with respect to investing, expenses, savings, or even earnings. So, in order to stay focused and inculcate the money mindset which we want to do, we'll create a leadership board kind of a thing for all the members, wherein we focus on topic based actionables. So, whether it's respect to investing, SIP related investing, having a philosophy, we'll have to keep it action oriented so that you set up your investment journey straight away. So that is the main focus, having an action oriented program for each one of us. So that was about Wealth School. And we are now open for all the questions and answers.
Sharon, any ending thoughts that you have about this program?
Yeah, sure. I just wanted to add about on the Discord community and the WhatsApp group Mohit was talking about, and why that is super crucial. Because in today's world, especially in India, there is no a reliable person that you can depend upon for personal finance information. Most of us who don't want to do the research, we'll just ask our immediate elders, who are our parents, and most of our parents have invested in fixed deposits. And where do our parents get their financial information from? They go to the banks, they'll talk to the bank employees, they'll sell them some product which they shouldn't be buying, and then that same knowledge comes to us. So this is what has been happening for decades now. So there is no reliable source of information. So creating an inclusive community like this of like-minded people, where not just us but other people who are interested in the field of personal finance can contribute to the knowledge sharing, right? And creating a huge repository which only grows over time. So something of this sort is missing right now in the Indian personal finance space, and that is what we're trying to do. We're trying to fill this gap by creating this community, so that more and more people can benefit not just from us but from each other. Just want to add that.
Wonderful point, Sharon. Thanks for that. And again, thank you for taking time out for this. We are open for Q&A. Sumita has asked me questions. Unfortunately, this is about wealth creation. I know, a lot of people like my own friends who are 43, 44 wanted to check if I can help you in this. See, the thing is, this is a program which is focused on millennials' wealth creation journey. But of course, it's not that it's all over if you're not a millennial, right? You can always plan your finances even today, but may not be this way. We'll have a different kind of a way in which you can do it. Please do fill in the forms. I'm sure Mohit will figure out an alternative. He is very, very good at figuring out alternatives for people who are above 40 also. So we can always do that. And I'm sure, Sumita, once you fill in, Mohit will be able to help you there as well. So Mohit, I'm just stopping the screen so
Yeah.
that we are all visible clearly. Okay, wonderful. Rohit, I'm 20 years old and haven't will this be? Oh yes, Rohit, it will be beneficial, but then as was mentioned in the presentation, there has to be certain bit of an action plan, right? It is all good to learn, but till the time you don't invest, right, there is no responsibility on your behalf. That's the reason why we want to do with real money and not with money like mock money also, because mock money doesn't have emotion. Real money has a lot more emotion.
Right.
So while you will get a lot of good concepts, I'm sure it will be very helpful for you. It'll also be great if you can also invest with us. Investing is important here so that the concepts can then become, you put in a practical knowledge to it, and it ends up becoming a very on the job kind of a program. So it is important, but please do join. That shouldn't be a problem. Abhishek, income streams for retired parents. That's a good question. Retired parents, unfortunately, FDs are a downer today. Inflation is eating into FD. Real returns are very poor. Real return is nothing but FD rates minus the inflation. That's very poor. How to create income streams and for retired parents? So one small thing that we do is, let's say, depending on the age of the parent, right? You match the risk profile of the parent to the person who's going to bequeath it or going to take it. So, for example, if you're the person who's going to be given the money, and let's say your father or mother after your parents, then try to match the risk profile closer to your thing so that there is a lot of growth, and also they can create significant amount of wealth creation or income stream for the parents. I mean, I'm just trying to give you a very brief understanding, but essentially match the risk profile of yours or the person who's going to bequeath the money to that of the retired parent. Do it very smartly. You need to plug in few more things, but I'm just giving you a broad framework, right? Another question that I got. Thank you, Abhinav. Yeah. Okay. Okay. Yeah. Thank you, Abhinav. Please do. I now real. Yeah, you are the person I was looking for. I'm sure you would have a lot more questions. Please feel to fill in the form and also share it with your friends. So one more question that I'd come in was from someone else is saying, what is in it? Why is Augment doing in it? What is in it for Augment? That is, someone asked me this. While the program is free, the as I mentioned, once you start saving, you need to invest into few investment products. Those investment products where we tell you to invest in, right? Again, there's no vested interest. We will do the right kind of planning for you. But those investment that you invest via us, they pay us brokerage. It's like investment management. And that is how this program is built. It is not just about teaching you, it is also about getting your equity there, getting your money involved there so that you learn on the job. And that's how we make our money. And we are very, very open about it. There's nothing here to hide it. Pritesh has asked me, running low. One second. What should be my ideal percentage saving from my income? Kshitij, the higher the better. I have seen, so we are trying to figure this out, but I've seen people at 25. For example, if you see Sharon was saying he could save anywhere about 60 or close to 50, 60%. So for example, his income was a lakh, and then there were some bonuses, and then he was spending about 30K. Plus, he used to spend about a lakh, maybe a lakh and a half for his Goa trip or something that he wants to, that's like an annual expense or so. So if Sharon is able to save about, let's say 3.6 lakhs for this thing, 1 lakh for that. So let's assume we round it out to 5 lakhs. So he's actually saving about 7 lakh rupees per year, which is absolutely an amazing amount to save. Just imagine you're saving 50% of your income as savings. Try to target as high as possible. There's no broad framework, but you can always look at 30% as a minimum. and increase as you grow. So, and that is where this expense management tool comes very handy. You get into the nitty gritties of where you're spending, and once you start looking at it, you will figure out, okay, why am I spending on a certain thing which is not adding any value to me? So that's how this expense management tool that Mohit has built will definitely help you,
So I just
right?
want to add something there. So in most online sources, they might say that there's this rule, right? 30-20 rule, save 30%, save 20%. People take it literally, right? They will literally save just 30%, and that they said they have the freedom to spend everything else. But we like to look at it in a different way. You need to understand how much you actually need and then save the rest. Like why are you limiting yourself from saving only a certain percentage, right, when you don't need all the remaining money? Because when there is a supply of money, you will find some way or other to spend it, right? But you need to find out whether you actually need those things or not. And the fastest way to financial independence is to increase your savings rate. So if you always limit yourself to 30 percentage, and when let's say you get an increment, a huge increment, you get a promotion, you shift companies, and you still keep it at 20 percentage of that new income, then you're limiting yourself from your increasing your saving potential when you can actually do it. And like I said, increasing your savings percentage is the one of the fastest ways to reach financial independence.
So one rule that while I personally don't believe a lot in those blanket rules, right? One rule which I always believe, which I've created for myself, is if my income growth is 8%, I'm going to increase my savings rate by more than 8%. It's as simple as that. If you're going it by 10%, you've switched jobs, made a 25% this thing. Just try to increase your savings rate by 25%, right? So good question, Ayushi. How do you help us create an emergency funds? That's a very good question. And in this model, we have very consciously added a column for emergency fund. So it's not just about investing all your money in equity or debt or commodity. We have actually created a separate bucket for emergency fund, close to about 5%. Mohit, how much does it? Close to about 5% of your savings goes to emergency fund. And over a period of time, as we understand that the emergency fund has become very large or too small, we will try to modify it as we go. Very good question, Ayushi. So there is a separate space that we have created to create emergency fund out of your savings itself.
Right.
When you say Harshit, when you say ultra aggressive is a frame. It's a framework. It is not about investing in direct stocks or mutual funds or let's say some startups and all this stuff. All we are trying to say is that if you once we understand your risk profile, and we believe that you have the potential to take risks, right? Then we will try and add those funds or stocks or something else that will generate maybe the right return for the risk you're taking. It can include stocks, it may not include stocks. It can include, let's say, some unlisted firms, it may not include. It depends on person to person and the kind of assessment that we make. But yes, it may not have too much of debt in the portfolio, that is for sure. But at some point in time, if the market becomes very expensive, for all you know, you go all into debt. But for now, I'm just saying it may include a lot of other assets also. Momentum small case, Ram Reddy, I have very little information about small cases on the momentum side, while we ourselves have some small cases, but I don't know which one you're talking about. This What I've realized is while we all love stocks, right? It has got its own kind of pains and taxations and a lot of reporting and all this stuff. I don't really feel that till the time you have about a crore, you should go directly into stocks. I mean, this is my assessment. You need to do a lot of research. The issue with stocks is आपका दोस्त बोलेगा कि अरे भाई वो ले लो XYZ stock कल 20% बढ़ जाएगा and all this stuff. That is the way people build stock portfolio, which is absolutely wrong way of doing it. So my suggestion is till the time you do your own research and understand it well, don't get into stocks. Give it to the experts. I know the returns may be a 0.5% or a 1% lower, but it makes sense to do that than losing your money on wrong stocks. The fee, Saumil, the fee is, we don't charge you anything. The program is free. When you invest into mutual funds via me, I get brokerage out of it. So the mutual fund house pays me the brokerage. You don't pay me anything. Nikita, PPF, a lot of people don't ask me this question because it's a little boring to invest in PPF, but make sure it's a part of your portfolio always, whether you're 25 or 55, always keep investing in PPF, because where will you get those kind of high returns tax free, right? it makes sense to max out on your PPF as much as possible. So that can become your debt portfolio, and the savings that you have can become an equity portfolio also. So consider that as debt and go big on PPF. So I didn't understand what is VOR read, so that I'm ignoring. So Manish, yeah, so Mohit, you're getting a lot of questions from 50-year-old guys, so I think you should build a program around it. Manish, please do subscribe. Mohit will try and do a little different things for 40 plus years people. I mean,
Sure.
in fact, my friends have been pounding him already. I'm sure he will have to work on something. So please do apply for it, and as and when we figure out a way for income stream, like someone asked me for their parents, or housewife, like someone was asking me, and you were asking me about 52-year-old guy, I'm sure we'll be able to figure it out. Okay, Abhinav, directly. So for me, Abhinav, you're a fresher, which means you've just joined. I hope you save a lot of your money. And depending on the kind of risk profile and the kind of financial goals you have, you should go. Primarily, I'm a believer in equity. So I would suggest mutual funds out of the options that you mentioned, like FD, direct equity, bonds, and all this stuff. But this is a broad suggestion. Everyone needs to go through the risk profile and understand your plan and then suggest you. Don't There is no blanket advice. You need to go. It's a personal advice. We'll look into it and then figure out. So enroll for the program. We'll talk to you about this.
So just one addition there to Abhinav. Why is it so difficult to tell just by reading that is because, for example, let's say you're just a fresher, you just joined, but you're probably thinking of doing your master's maybe 3-4 years from now. And if that is the case and you're saving up for that, that is only 2-3 years away from today, right? And if it's just 2-3 years away from today, then putting it in equity may not be a good idea. Let's say that is not your goal, you don't want to do masters, you're just starting to save up for your retirement right away, then putting as much as possible in equity would be the right thing. So again, it's so dependent on what your goals are. So even if people are of the same age, they will not have the same asset allocation because they are so different people. At the end of the day, we have different things that we want, and we want it at different points in our lives. So that's why it's very important to have that discussion on a one-on-one session.
Thanks, Sharon. How much does this well school charge? Nothing. As I mentioned earlier, I get paid by the companies or the mutual fund houses that I recommend you to invest in. Of course, there is no vested interest. It's all properly planned, and this is my business. I mean, I manage about 450 odd crores. When I mean the entire firm of Augment manages 450 crores. So that's our stream of income. The whole idea is to educate you, handhold you, get your investments correct, and of course, get paid for it also, right? What's your take on investing in crypto NFD for NFT, an area which is a black hole? I don't understand that much, so I don't invest one. I have in one crypto. I'm getting. I mean, I have Bitcoin invested that everyone knows, but other than that, I don't recommend crypto and all that. Good to talk about. Is it really going to pay off? Only time will say. So it's too early to talk about it. I would rather go with Indian equity. That itself will give you much better return, in my opinion. You should read what Ashwin has written. Amazing statement. Savings is not what you do after spending. Saving is what you do before spending. So first plan it and then spend. This is what Mr. Warren Buffett strongly believes in. Save, spend what you after you provision for savings, and not the other way around. If you could do this, you don't need anything else at all in your life. I'm telling you, this is a very, very good statement by Ashwin. Completely agree to Mohit. I have a couple of lakhs. Should I invest in crypto? Shubham Bagdi? No, not at all. Stay away from crypto. Crypto, I mean, again, maybe because of my age, I consider it very risky. If you want to take risks, of course, please go ahead and do it. If it is, let's say, 5 or 10% of your portfolio at max, yes, you can do it. But investing in crypto, you need to have a strong logic behind it. Don't do it because of FOMO. Right, that's my only suggestion. Right, Abhinav is returned. This will help you drive. Okay, Abhinav, thank you. How to get started? Okay, I'm just posting the link. Please fill in the form. Please fill in the form. Click the link and fill in the form. Asta, you will be able to. We will get you and we'll contact you tomorrow and onwards. right? So all of you who are interested, please share it with your friends, with your colleagues. This is a program for millennials, and I'm sure this will be very helpful. How does the corpus of 300 crore work over time? I'm a bit risk averse person, so keen liquidity, so need liquidity at hand. How does the corpus of yes, so for example, if you see till 44 45, Mohit has split it into two, right? Before 45, after 45. So before 45 you're looking at investing a little more aggressively, where the kind of money that you will have in hand will be less, but as you grow and you have built a certain base, you will have a lot more liquidity coming in your portfolio, so that you from an ultra aggressive you go down one level, or from an aggressive you go down to a moderate level, from an ultra aggressive you go to aggressive levels also, thereby adding a lot of liquidity in your portfolio. So that there are ways to do that. This avenue is not I mean, I can't explain that in one session, but yes, you can create liquidity also, emergency funds also, achieve your financial goals also, and also retire with close to 100 crores or more or less around that, right? So that is quite possible. So more on that in the program. Any last questions? Because we are 50 minutes into it. Any last questions? Will you teach basics of asset allocation? Yes, for sure, Abhishek. Asset classes, one of the programs that we want to, in one of the sessions, we are going to touch base upon a lot of asset classes, which you may or may not know. For example, there is a rental income fund you can invest into in a commercial property in a fractional way. You don't need to own it. If it's a 5 crore property, you just pay 5 lakhs and you're one of the owners. So there are a lot of things like this. I mean, we'll talk um, in diamonds. Okay, nobody has asked me diamonds. I don't know how to invest in diamonds in a liquid way. Diamond is so this is yeah, okay. She I'm sure she loves diamonds, but I don't know how to invest in diamonds. Gold, yes, but investing in diamonds, I think uh, may or may not work. But utility wise, it is good. It looks good on your neck or hand or finger. Not sure how to answer that question, to be honest. I'm investing in diamonds. No, I don't know.
I guess that's more of a financial goal question then.
Yeah,
That
it's
needs to be planned.
yeah. So it is a. I'm sure. Yeah, we should plan. I mean, this is a good thing, right? For especially for people who want to gift their wife or a husband a large their 10th anniversary or a 40th birthday. These days, 40th birthday has become big, right? Let's try and add that and see if diamond rings for 7 8 lakhs, 10 lakhs work like a plan. I'm just trying to say if this is a possibility. Kshitij, too early. I don't know your profile. I mean, if you're made about, let's say, I do suggest that to an investor who's got 5 crores of savings or investments. These are all asset allocation principles. There are a lot of asset allocation principles. You need to first build the base, which is called the core portfolio. Then you build the satellite portfolio. There are a lot of logics behind it. So build the core and then build the satellite. That's when I said get into stocks after having 1 crore of savings or investments in mutual funds or some other asset classes. That's when you do stocks. After you do stocks, then comes something else, then comes something else. So you build a home after building a strong foundation. I think you are on the foundation levels. So for you, I mean, this is my assessment with what I'm hearing from you. So for you, no, because commercial property is for retired people or people who are nearing retirement, because the income doesn't compound. The money comes to you, right? If the income doesn't compound, how are you going to make so much money? You will end up spending that money, plus it's very tax inefficient. It gets added to your income, right? So you have to pay 33% or whatever is your tax slab there. So it's not a very great investment tool for young people. Yes, Asta, that's the way in which we monetize this thing. We will be handling your investments also. And if you remember on the leaderboard, we will give you a set of actions, and that's how if you don't take those actions, for example, we say that Asta, please start the SIP of 5,000 rupees, and you keep dilly dallying. We send you reminders, and if you don't do it, on the action plan side, you keep coming down. So this is an exclusive program. There is a time involved in it. There's a lot of people involved in it. So if you don't value us, at the cost of sounding a little rude, if you don't value us, then after a certain point in time, we also would like to give this opportunity that you have taken to someone else, right? So we want you to take actions basis what we assess your portfolio. So if you don't take action over a period of 3 4 6 months, then we may actually add somebody else in your portfolio. So you have to take actions, and in that process, you will also handle your investments. Thank you, Savia, and thank you, Kshitij. And glad that you could make it today. It is a 1 hour long session. Thank you so much, all of you, for being a part of this. Looking forward. One last time, I'm posting this form. Looking forward to seeing you, all of you. We'll try and help you as much as possible. For sure, who are above 40 and who are below 40, this is a no-brainer. You should join the session. Share it with your friends also, guys. Thank you so much.
Absolutely. I think there's nothing like this exists out there, right? Where you're told that someone will help you out manage your finances. We usually think that you need to have a lot of money. You need to be like ultra high net worth individuals to have somebody else handle your money. But now we have the opportunity through this program to help us understand how to manage our finances. And I think it's a great opportunity, right? And thank you, Anand, for doing this. For taking the time out of your, I don't know, for you're planning on doing for many years. So that is a great service that you're doing for the community, right? Because it's a free program at the end of the day, and doing stuff for free is a really difficult time to do. You're giving away your time to help hundreds of millennials how to manage their finances, and who knows, they will teach their friends, and the network effect just only grows. And I think this is a right step in the direction of increasing financial literacy in India, which is not at a great point at this, which is not at a great level as we speak today. Well, thank you so much for having me here. I'm super glad to be part of this, and I hope to be part of future sessions as well to help spread the good knowledge.
Thank you, Sharan.
Thank you, Sharan. Thank you, Mohit. And thank you, Sharan, for the kind words. I really love the Instagram posts also that you do, right?
Thank
Similar
you.
thing in my own way. I can't entertain people like you, but try to do whatever I can this way. And thank you, Mohit, for creating this entire thing. And Mohit is going to lead this entire Well School. Good luck for that. And thank you all. Have a great weekend. Bye-bye.
Thank you.
all.
Have a great weekend.